What's up, everyone? Welcome to today's market analysis / recap session. Unfortunately, I couldn't get one out yesterday because I had people over and I was quite busy. But today, we're going to go through a full blown recap and live analysis of yesterday's PPI session and set ourselves up for a bit of analysis moving forward as well. This is not going to be the pre-week analysis, that's going to come out tomorrow. But today, we're just going to do the PPI recap and some further education as well. So let's dive straight into the charts and what we see on NQES and all of that. Let's remove everything. Alright, so taking a look at what we see on the 4-hour, let me mark out where 8:30 market open of Friday was. 8:30 right there, whatever is prior to that, we can mark out. So it looks like we did have multiple main liquidity levels, which are going to be very significant. So let's just mark all of that out. Alright. This is essentially our main levels. We do have another one there if you zoom in. And this day I was actually thinking that price would go down, right? But I was proven wrong and price actually moved towards the upside, which we'll go over why that happened here today as well. So looking at the charts, I'm trying to see if there's any other essential levels. I do think this would be considered main because of the characteristics of this wick, right? Price went all the way down there, but it closed up there. It's pretty significant, so I'm marking that out. And you might be wondering, why the hell is it significant? Well, it shows us that in this 3-hour time frame, price was brought down all the way down to this level, but from that level, price went up and pushed price all the way up there, which shows that there was selling pressure, but buyers held this level, and this is a very key level for buyers, which made them push price up to this level. So this is a very essential level that shows very strong buyer strength. So for today, this is probably going to be our main liquidity level to focus on the day, right? Simply because of this wick characteristic, which is essentially a staple. Now, let's take a look on the 2-hour now. We do have demand zone there, but I honestly do not think we can carry all the way down there, but we'll mark it out because better to mark it out than leave it unmarked, especially if in certain occasions price does go down there with surprise news, which is not uncommon to see in these days. And then we do have another supply zone there. 2-hour, it's down there. We might as well mark out these lows as well while we're at it. Alright. So that's pretty much the main idea. Liquidity there. On the 1-hour. On the 1-hour, we essentially swept most of our liquidity. We do have level there. And that's essentially it for our liquidity levels, right? On the 30-minute, let's take a look. Is there anything we really noticed? We do have some zones there, but nothing essential, no supply or demand zones, which are looking out for me. 15-minute, this could be considered a supply zone, but I'm not going to mark it because if we do get up to this level, we can go here, and I don't like this huge wick right here. If it was something where we had it there and then selling pressure down here, then I would consider marking it. But I just don't like this wick here because that means we saw buyers come in and then sellers push in within this one candle, which does show that this is a seller heavy area, but you want to see something more clean. But and that will probably show up in the 5 minute. But as you see, look, we had a very strong buying pressure, right? But then sellers slowly started pushing it down. As you can see just by the candles, buying pressure was stronger than selling pressure, but buyer pressures died off, which caused the sellers to come in. So it's not really an impactful supply zone for us to work with. But that's essentially all the liquidity on NQ, right? Just putting ourselves at some area to start off on the day, right? We already figured out that this level, I'm pretty sure, right? Let's check on the 3 hour again. 3 hour, this wicked candle, yeah. Okay, so this level right here, this is a very key level for buyer strength, right? So I'm already seeing that we're making lower highs and we're making this price action is showing that we're more bearish than bullish at this point, right? And that's a pretty clean trend line right there. That's 3 consecutive touches, right? So there's two things which I'm really looking for, right? I'm either looking for price to come down into these liquidity levels where we have to see if we either break this level or we push above. If we use this as liquidity and see price move up from it with strong momentum, then we could enter longs from that position. But if we see price break through this level, then we can continue going down. And I was biased more on the short side, I mean, because let's just take a look at what we've been doing this past week, right? Just using simple volume profile. From last Sunday, right? Let's just start from last Sunday to, all right, hold on, to the current prior to this area, right? Let's see where POC is, right? Look where POC is. Our point of control where buyers and sellers were at most agreement, which resulted in the most volume, was down at these levels, which corresponds with our main liquidity down here and a 2 hour demand zone. So this is also a very essential demand zone for us to understand. But taking a look at where price is, without major and significant news, we can't expect price to come down all the way to this level in a mere one day, right? This might be a week's action or maybe in a couple of days. So we can't expect price to go down all the way there. But I am a bit more bearish because of this, right? That doesn't mean we can't retrace and continue going down or we completely can't be proven wrong. But the reason I'm more bearish than bullish is because of this. And it kind of sets a stage up for next week as well because I'm honestly expecting price to go down lower to account for this tariff war and everything. Although there has been a pause in tariffs that accounted in this large push up, that doesn't mean that the tariffs are gone completely. Many countries are negotiating tariffs and doing stuff, but I believe that as long as China and the United States continue this global trade war, it's going to be tough for the markets to stay on par and continue going up. There's going to be up and down action. And until I see confirmation that buyers and sellers will be at agreement up here, then I'm looking more for the downside than towards the upside, right? And that's just simple market mechanics. But for the overall day, the overall idea for the day and the game plan, you should always have a game plan before you enter the day because then you understand what you are looking for. And when you know what you're looking for, it's much easier to find those things out, right? So because of the bearish price action for market open, I'm either looking for expansion. First of all, I'm looking for expansion, right? I'm looking for either strong movement towards the downside or upside, right? And depending on that, we can see which liquidity level to target. Maybe we target this liquidity level, maybe we target this one off a break, or maybe we target this one, right? But our main liquidity level, in my opinion, would be this lower one. Why would it be this lower one? Because of that wick we were talking about before, where price could maybe come down into it, push up, or come down to it and break below. We just have to wait and see action at liquidity levels. I know I've already mentioned this, but I'm repeating it again and again so we truly get that structured in our heads. Essentially, we're just looking for a touch or tap on a liquidity level for us to see where price will go next and for us to capitalize on that. Additionally, if we see any expansion between liquidity levels, we can take a trade there, essentially targeting one of these levels, either to upside or to the downside. And that's where we set the day up on NQ. Now on ES, let's erase this again. Let's go on to the 4 hour and let's do this a lot quicker than we did NQ. Like the previous session as well, I do NQ very slowly for you guys to understand and to learn from what I'm doing, but I typically can do this a lot faster, and that's what I'm going to do right now. I just mark out market open of Friday, 8:30, 4 hours. There's liquidity levels that we marked out. This one probably me. There's one there as well. 3 hour. Now this is very interesting, right? Because on the 3 hour we do see a good amount of supply zones on ES, which we are marking out at the moment. Again, I'm not liking this wick. This wick is more manageable because of this large move that followed through. It's different on higher time frames. It's much different than smaller time frames, and I want you guys to understand that as well. On there's not much. You could consider this the main liquidity level, and on the 1 hour you can consider this a normal liquidity level. Also, you can consider that as a normal liquidity level. That's essentially it for the main liquidity levels. On the 30-minute, looking to see what we can find here. I wouldn't consider that a supply zone necessarily. Yeah, not much there. 15-minute. Yeah, I wouldn't consider that. And nothing much there as well. And let's just check the volume profile to make sure that what we were seeing on NQ matches with ES, and it does exactly that, right? POC, point of control, the area where buyers and sellers want to do business is all the way down here, as demonstrated by all this action. But this is also demonstrated because many of the news are at that point, so we do have to keep that in mind as well. We should never be married to our bias, but having a bias can help us create overall market sentiment either towards the upside or downside for us to get another sense of an edge in the market. So now that we've done that, I'm essentially thinking the same thing on ES. Do you see lower highs start to create themselves? Yeah. Lower highs. You can mark that out here. I see here as well. Yeah. So downtrend is seen to continue. So that's what I'm seeing. It's essentially the exact same as what we mentioned on NQ. But to further solidify that, let's look at the VIX as well. The 4 hour. Oh yeah, we have to mark out Friday, April 30th. Alright, hold on. On the 4 hour, we do have this level, this level. I'm looking for gap fills because gap fills are main sense of ideology on the VIX. Okay. DC price continues up, but I need to go on lower time frames to understand it better. I would consider this a key level. I would consider that a key level, and this would also be another key level for us. Okay, looking on market. Let me just chart this out real quick. We do have a gap fill down here, but it's not major for us to be worried about it that much. Okay. At this point right here, price does look like it will continue going higher, but that's not demonstrated in the day. But simply here, it does look like we may either go up or be choppy between these two key levels. I don't mark out liquidity on the VIX because I feel like it's better to consider them key levels on the VIX rather than liquidity, right? And that's for a multitude of reasons, but if you want to market liquidity, you can go ahead and do so. It essentially works the same way. But I do see price essentially choppy in the action, or a clear sentiment is not able to be seen on the VIX. So we're going with what we saw on NQ and ES, right? So now let's actually backtest this session and go through some live analysis of what happened in the day, right? We just went past it, but there. Remove this right here. Okay. Okay, so when market opened, we saw price create a crazy candle, which did not essentially identify where price will go next. That does look like a reversal candle, but we have to wait for price to expect. Additionally, there was PPI today right at 7:30, right here, right? And PPI did not come out good. It was worse than expected. Price still moved up, and since this is high impact liquidity, we are going to mark out the highs of that as well because this is new liquidity, right? We stayed flat on PPI yesterday. That's why we really did not trade. CPI, PPI, NFP, FOMC. Do not trade those days, especially if you're a price action trader, because better to be safe than sorry, and it can stand as a good time to take a break because breaks are also essential. Now, this episode has already had 18 minutes of pure analysis. Now, let's get straight into the day, right? Now that we marked everything out, when the day started, price actually expanded towards the upside, right? And we see expansion towards the upside, but every single gap is being filled by these wicks. So there's not much we can go off of here at all, right? So we'd stay flat till 850 at least, right? Now we start seeing breakage towards the downside, right? And that's essentially a continuation of this downtrend that we've been seeing. Right? So I'm still thinking bearish overall, right? We do see sellers continue to come in, and I am looking for V2 retrace plays throughout all of this, right? Marked out our V2 levels there. Price did come down to this level and create large reaction towards the upside, right? But we do have our overall trend going down, right? So you would likely stay flat here as well because you have two opposing confluences. And when you have two opposing confluences, you typically want to stay flat. You want most of your confluences to be leaning towards one side, And especially on the charts, you don't really want two opposing confluences. Now, looking at this down move, we do see that we kind of broke above this level, right? And that doesn't necessarily mean we're going to continue all the way up there. But let me see. Let me put this at 0.8 to see what would happen in that case. Yeah, it would be the same. Right? So not much there we can do as well. That's again two opposing confluences. But one thing you can potentially take a trade off of is this, right? We see price come up all the way here, right? We see sellers holding this area very aggressively, right? We're creating these two wicks that cause seller downside all the way down to here, right? Which did get bought up till there. But this is a day with higher volatility than expected again. But when we saw price break through this wick right here and create this lower wick, that essentially stands as a sort of confirmation for the shorts. And for the shorts, you'd likely place a stop above these two liquidity levels, macro or between the range liquidity levels. They're not essential liquidity, but I'm expecting that on order flow as well, this would stand as key level for liquidity. And we would target these lows down here at our main liquidity as well. The one issue with this is that our risk to reward is only 1 to 1.02, which is essentially just a 1-to-1. But this is a good trade confirmed by long-term confluence, and I don't see much wrong on this hand as well. This essentially invalidates this, validates the trend line, and provides us confidence that we can continue going lower. One thing I would have liked to see was if this candle was a bit shorter and these 2 wicks were a bit down here, then we likely could have reduced our risk down to 1.5. And order flow can help with that as well, right? But for now, just looking at the NQ charts, we have a 1 to 1.02 trade, but if we put it right on there, that's a 1 to 1.03, which is essentially the same thing. Provide ourselves a little room to play with. It's a 1.02. Now let's take a look at ES during this time as well, which is 9:15, which is right here, right? Now ES does make it a bit better for us in my opinion, but let's take a look here as well, right? Say we enter on the break of that. Place our stop there. Target these lows. It's essentially the same. The risk to reward is a bit better, but it essentially is the same thing. 1-to-1 risk to reward does play out pretty nicely. But in both these trades, you would typically size down to half of your position or even less, right? I honestly wouldn't even trade something like this, even with like my lowest number of contracts, because risking 600 ticks is quite a lot, right? Let's just do some math real quick and see what it actually is, right? On 1 micro, which is 50 cents per tick, times 617, that's $300. You're risking $300 on one trade, on 1 micro. That is quite insane if you'd ask me. But I mean, it's not too bad. Like, if you did have a lot of drawdown and you saw pure confluence within order flow as well, you could have taken this trade. But typically, if you're putting 3 contracts, 3 micro contracts, and you risk 200 ticks, that's essentially the same amount of risk, right? So on 1 micro, this would have been quite a good trade, and there is multiple confluences for this, but this would be a spectacular trade on what I see on the markets, right? Now, looking at what we do here, right? You come down to this liquidity level. We see already a major wick towards the upside like that. That's giving us a clue that price may not want to continue going lower. But that's just one clue, and we have to piece everything together. Now, I want to emphasize something to you guys. One thing that can really stand as an edge is order flow, because on the charts, you can know using simple price action like the wicks and all of that. But with order flow, you can do even further analysis to tell if at a level we're going to break through, reverse, or consolidate. Like on Footprint Bookmap, you can have these additional resources that essentially show you where we may go next in terms of the market. And with order flow, you potentially could have even caught a reversal at this point, seeing the price to head high, right? But as we said before, this was our main liquidity level for the day, which is a really good sign for pre-market analysis as well, is what we did before. Now let's keep on moving forward. We do see that we do push up. We do create this gap right here, which you do get tapped into. And I want to go on the 1 minute. I don't take any trades on the 1 minute, but sometimes you need to go on 1 minute to understand where your V2 levels stand. And you can do two V2 levels here, which we can see, right? From there to up till here, which is at these levels, or from here to down till there. If we look at V2 levels from here to here, we do see that price tapped into a V2 level and a fair value gap, and we show strong rejection from our liquidity level, which we knew was going to be an area filled with buyers as well, right? So this is definitely an area I'm looking to potentially get long in. And with our execution strategy, you likely could have entered somewhere around there. I'm going to place it there just to risk a bit more than possible, right? To make it more realistic. But sometimes you can even get an entry down here. Optimally getting an entry right there. And where would you target? Yeah, that's the issue with this trade, I'm not gonna lie. There's not much area to target at all with this trade. Like, where are we gonna target on this trade? We see price coming down all the way here. Now we're at a V2 levels, right? Now we came into these V2 levels and started rejecting. So in the occasion that you do inhibit standards of your V2 levels, you need to be very careful with this trade because there's not a clear target where to go to, which you typically need. Now there may be a clear target, which I am missing, which I'm going to check on ES at 940. 940 on ES. Yeah, not much on ES as well. So going back, this does set ourselves up for, let's keep it at 1.5 as an estimate, right? When we're risking a lot more than you should, typically you can put your risk down to here and aim for something like that as well. But typically, if you do get a decent entry, you can risk a bit more just to be safe, more safe than sorry, right? So let's just say we put it at 1.5 and then move this down, move this up to accompany that, right there. Hold on. I'm just trying to make this perfect so it can seem the most reasonable. Alright, there, that's good enough. Now, looking at this, the only potential area we could have taken target would have been this area right here, which would be a 1-to-1 once again, essentially, right? And we love our 1-to-1 trades. 1-to-1 right here, capturing 627 ticks, and 1-to-1 here, capturing almost 300 ticks, right? Now, usually in occasions like this, you have the bookmap, right? And on bookmap, we typically see price target key levels on bookmap before even making its way down, right? We move from one bookmap liquidity level to another bookmap liquidity level. So I'm trying to depict a heat map for you guys on the market, right? So likely we had heat here, we had heat there as well. We had a big heat level here. Came down here. This was a very, very big heat level. And then here we pushed down as well. We created heat across all of this, right? So what is price doing? Price went from there, pushed from heat level down to another heat level. Now we took all this liquidity and moved down to this level where there are already passive sellers at this area. And then we moved down from there into here as well, which continued this move up, right? That's how Bookmap works essentially. Now, yeah, honestly, this trade, if we did have Bookmap Confluence, you likely could have taken profit up around here, which would be a pretty decent trade spanning 10 minutes. That's it. But the only issue with this trade is that on the charts, you cannot take Bookmap analysis. So I'm essentially gonna mark this off because there's nothing on the charts. But if there was anything on Bookmap or order flow that signaled us to target like a one above 1.25 or even 1.5 risk to reward, we would enter that trade. The Bookmap replay has not been uploaded yet, so unfortunately I cannot show that to you guys. And yeah. But moving forward on the day, I don't see much. 10 a.m. I have no clue what happened at 10 a.m. We did see FOMC member Williams speak at 10 a.m., but I want to research more into what happened at 10 a.m. to cause this massive candle of, let's see, 756 ticks, right? You never want to trade when there's 760 ticks. And yeah, after that we see going down and then going up. I don't really see anything else from that time to 10:30, so that's where I would have called it as a day. Now that's essentially all I have here for today, right? Seeing us now looking forward, let's take a look into what happened and where this actually sets up, right? Because this is actually very this provides us for very, very good like setup for the upcoming week, and I'll show you guys why. So let's take a look into what happened, right? Like we said, price pushed down to this liquidity level, right? Now, moving forward, what did we do? Price took out all this buy side liquidity, right? We took all of this liquidity out. Now, what do we have in our pockets? We have a lot more liquidity now. That liquidity could either push ourselves more down, like we could use all of this liquidity to make our way down like we expected for the week, or we can potentially move higher and grab onto those liquidity levels as well. But we did tap into a main liquidity level, and on ES, we are in a 3-hour supply zone. So if we do see long-term breakage towards the downside tomorrow evening, that could set ourselves up for some bearish action from Monday to Wednesday on the first half of the week. But we do have to wait and see how the market opens on Monday for us to make any trades on that. But that's essentially where I'm going to leave it off here today. I know this video was very long, 33 minutes, but like I promised, here's my live analysis of Friday's PPI and a bit of pre-week analysis. We will have a full pre-week analysis tomorrow, but here's a bit of pre-week analysis. And that's pretty much it. If you have any questions regarding the concepts I've discussed, please leave a comment down below or join the Discord. The link is in the description. I'll be glad to see you in there. Everything is completely free, and we do have opportunities for you guys to learn and to push yourselves further. And I highly encourage you to join. Essentially, that's all I have here for this video. I'll see you guys either today or tomorrow for an educational or pre-week analysis video. And I'll see you guys then. Have a great day.